Hello and welcome to the day after the night before. The election was a bit of a red wash, and some really interesting factors came out of it. Now the markets have reacted quite significantly. Bond yields are up. The dollar is also the US dollar that is also moving up. The divergence between bonds and stocks is widening. The impact of Trump, as we know, is big on tariffs. So the impact on goods and prices. So will there be inflationary pressures there? And the impact of tax cuts too on the deficit. All these play into the commodity markets, which is why I'm very glad to be talking to James Cooper, our resident geo, today. James, what do you make of it all from a commodity resource perspective?
Yeah, so there's so much happening, and it's really just one night and trying to analyze that. It's going to be difficult, but we'll do our best. Um, so I guess the most dramatic news overnight was we saw a big sharp pullback in gold. So gold was down over 3%. Copper was down over 5%. So they're both really big moves. And then I guess all we can really do is try to give some reasoning on why that's happening. So I think gold is, I think, with a stronger US dollar, that's one of the key reasons why gold has pulled back. But of course, you got to remember that gold has had a really strong run in 2024. Perhaps the copper pullback is a little bit more concerning. It's some reasons for that would be Trump has been really big on tariffs, really stiff China tariffs, and I think the market is concerned about what that could potentially do for a commodity like copper. So China is a manufacturing-led economy, so if and it is also a major demand driver for copper. So China is one of the world's largest consumers of copper.
Yeah.
So with these tariffs, if that then starts to weaken the Chinese economy, then what does that do to copper demand? So that's one of the key concerns. But really, it's a two-pronged threat for copper because you've also got the energy transition, and Trump has been really, really talking up the sort of idea of pulling back on Biden's Inflation Reduction Act. So that just means stepping away from any commitment to renewable energy, so wind farms and electrification. So that's viewed as a major future demand driver for copper. So you've got two major potential headwinds for copper prices with the Trump election. I think that's why the copper market really panicked overnight. So that's we'll see what plays out in the days ahead. But I think there's some different angles which I think the market will need to digest first before we sort of see any clear trend.
Yeah, and I know we had a good chat as a team this morning, and it's like it's way too early. You got to kind of sit back, see what happens. Um, you mentioned the energy sector there. Now one thing I was going to ask you, which is kind of more based on your piece in Fat Tail Daily today, is that you highlight the contradiction between Trump's promises of tariffs and keeping inflation low. How do you see that tension playing out specifically in the energy sector?
Yeah, so I think there are a lot of contradictions in what Trump could deliver. And with the energy side, so Trump, another key policy has been to flood America with cheap energy. So that just means a return to pumping oil and gas. I think he said at a recent sort of party convention, drill baby drill. So pulling from Sarah Palin, the Alaskan governor, former Alaskan governor, her famous slogan. And that
Hmm.
just means pouring a lot of oil and gas into the US market or global markets because the US is a major producer. So it has the capability to do that. Um, and because investments into oil and gas developments have been really weak over the last sort of 10 or 15 years, because there's been this push to go to green and renewables, that is probably likely to see a transition back to investing into oil and gas. Um, so some of the threats there for oil and gas stocks is that if we see this sudden supply surge, well, that could actually reduce the price of crude and gas prices. So that's also a bit of a threat for prices, because Trump obviously wants to lower energy prices, which could then sort of drive back some of the inflationary pressures, which we talked about with China and tariffs, which is very inflationary. So it's just a lot of different cross currents happening, and it's going to take time to see which sort of market forces take effect. So
Yeah.
it'll be a really interesting few weeks ahead.
Cross currents is the right word, isn't it? Because if for example, energy prices do go lower because America will now flood the market with oil or gas, or look to have that back on the agenda, that's actually lower. The cost of energy is actually positive for commodity miners, right? Because a lot of their expenditure is in energy because they need that to mine.
Exactly, yeah. So operating costs for the gold miners could come down with energy prices. But one of the key things I don't think this policy is really acknowledged or seen. Sure, Trump can sort of push ahead with developing oil and gas and sort of try to flood the market with new supply. But it takes a long time to get these
Yeah.
new projects online. So um, first of all, you have to begin with exploration. So we've seen a big drop in oil and gas exploration over the last 10 years. I've shown some stats in today's Fat Tail article.
Hmm.
And then once you make these discoveries, which are happening more and more in deep water offshore basins, with sort of your onshore deposits sort of declining, then you have to go through development permitting, which can then take 10 years. So by the time Trump's push for sort of oil and gas development, by the time we actually see that hit the market, well, that's going to be well after Trump has left office. So
Mm.
probably up to 10 years before we actually see any sort of meaningful lift if we drive investment into sort of bringing on new supply right now. So it's not going to be a sort of turning on on a switch to bring in new oil and gas supply. So I don't think there's an immediate threat to oil and gas prices.
No, is it more like the sentiment? Is it more driven by sentiment at this stage?
I think so, yeah.
Yeah.
So a lot of it
Yeah.
would be sentiment, and I guess there's a lot of, as we said, confusion, and commodities is really a key part of that, because a lot of Trump's policies are having these sort of tailwind effects on commodity prices. So I guess back to copper, you've got to remember too that Trump's one of his biggest allies is Elon Musk, and Elon is a huge advocate for. Well, he's made his billions from an EV car manufacturing company. So
Mm.
how does that sort of push away from renewables then fit with one of his key advisors with Elon Musk? So um, I think we've got to see a lot more before we can really make a judgment on where commodity prices might be headed.
Yeah. We are talking of crosshairs. We're kind of going between commodities at the moment. I've got another question about the
Yeah.
oil market. You mentioned that Goldman Sachs predicts that oil demand will rise to 110 million barrels per day by 2034. How do you see this demand forecast reconciling with global green energy initiatives that you've talked about?
Yeah, I mean, if Trump is stepping away from these global green energy initiatives, that would you tend to think, okay, that's just going to increase the demand for oil and gas, because if you haven't got that energy option on the table, then you have to go more to traditional energy. So we saw a big lift in coal prices overnight.
Yeah.
Oil and gas, I think, was fairly flat. So if and remember, Trump is just America. He's not the world. So Asia and China will probably continue with their sort of renewable energy kind of pushes, and Europe. So of course, Trump is going to be driving a lot of that. So I think it's it's I think at the end of the day, we'll really be just open to all energy options. If Trump wants to keep inflation low in the US, um, I think he needs to be open to all the options on the table. So that's traditional oil and gas, coal, but I think it's also going to have to be some form of green energy if that's already been the
Mm.
investment that's taken place over the last 3 or 4 years. So I think it's all cards on the table for energy, and I think that's going to be the best way to keep prices low and inflation from ticking higher.
Um, how many oil and gas exploration or development stocks have you got in your portfolio right now? Are you or where are you sort of weighted for readers that don't know?
We don't have a heavy weighting to oil and gas. It's definitely something that we want to increase our exposure to more. I think a lot of people will be a little bit tepid now that Trump is in, and he's promised to sort of boost supply. So that's that sort of fear of prices starting to come off. So
Oh,
I think
yeah.
there could be some short term pressure with oil and gas stocks, and that could be a really good buying opportunity. So that's what we will probably capitalize on. So we just have one oil and gas play in our diggers and drillers portfolio, but we'll certainly look to capitalize on any sort of market pressure over the next few weeks.
And just for a little takeaway for people viewing this, what kind of characteristics should investors look for in oil and gas companies in this kind of environment? Like obviously, there's quite a lot on the market. There's ranging from bigger blue chips to God knows how many explorers. What characteristics would you recommend investors stick to figure out which ones to invest in?
So you got to remember, over the last few years, oil and gas producers and developers, well, the big producers really, they haven't been investing in new supply. So they've been putting their profits back into sort of um, dividends, large dividends, and share repurchasing. So it's not money hasn't been going into development or exploration. So um, my key focus would be looking at companies with good long-term reserves, or explorers or developers that have known resources. So these basins which they've already tapped into, they know that they hold oil and gas reserves, which can then be delivered to market. So I think they will be the key sort of assets to own because there hasn't been this investment in future supply. So I think looking at the companies that can access supply within sort of the next 2 or 3 years, I think will be those the companies that do the best.
Gotcha. And final question, James, just more of a bigger picture view. I know you've been quite adamant that we're at the beginning phases of a new resources commodity super cycle. I know that phrase is a kind of a well-worn phrase. It was particularly used in the last cycle. But does these events change that view in any way?
I don't think so. If we think very in basic terms, so what do the China tariffs? What does that do to China? Potentially, it slows down the economy. Um, but is consumerism is that finished? These goods have to be produced somewhere. So
Mhm.
if it's not in China, where will it be? Will it be in the US? Will it be Southeast Asia, India? So goods manufacturing is still going to be happening somewhere. So there's still going to be commodity demand, whether that's China or somewhere else. And to actually rebuild the manufacturing capability that China has would be incredibly commodity intensive. So um, if these tariffs do go to the extent that Trump has promised in his campaigns, I think there'll still be that demand for commodities that where that demand comes from might shift, but it will still be there as long as consumers keep spending in the US and across the world. I think there's still opportunities for commodities in this market.
Yeah, so that's the demand side, and obviously the supply side is still affected by the fact there's been no new investment in new supply for decades now. So that all plays into it as well. Thank you, James. Much appreciated. Good to get your thoughts. If you'd like to check out James's article today, the link is right there at the top of the description below. Do check it out. It's 100% free, and let me know what you think. Thanks, James.
Thanks, Woody. Cheers.